to welcome John Irwin from Leyton. How are you doing, John?
Good. How are you today, Craig?
I'm doing great. And today we're talking about the digital media tax credit, who can apply, how much you can get. I've been hearing different numbers, up to 100K back for distribution and marketing, 40% of labor costs potentially. There's a lot of people interested in this, and I'm just going to throw it over to you and we can get into it. But before I do that, put your questions in the chat room Q&A window. If he says something you want clarified, put it in there. We will circle back to it at the end and cover it. So with that, over to you, John.
Thank you. Thank you. So I'm going to start by giving you the end chapter right now. Just we'll jump right to the end, just because there's a lot of complexities to this. But at the end of the day, there's essentially two main points that I want to instill with you guys. First off, eligibility. There's only two ways for you to be eligible, and this is specifically for Ontario. So if you do have questions about other provinces, just so you know, the only province that doesn't have a digital media tax credit essentially is Alberta, and every province is different. Now, one thing to know about the digital media tax credit, unlike the shred tax credit, is two things. The digital media tax credit is not filed with your taxes, and there's not a federal portion to this. Okay, so wherever the work is done, that's where you kind of claim the work, and we'll get into eligibility. But as far as eligibility goes, in Ontario, there's only two types of products that are eligible. First off, it's a video game. You built a video game that's interactive, or an app that's a video game that's interactive, or it's educational for children under 12. That's it. Before, like 4 or 5 years ago, before they really kind of tighten the criteria, there was a lot more eligibility, and those might be some of your questions. Well, I did a website that's interactive. Why is that not eligible anymore? It's because they've changed the criteria. So they've really made it and focused it in on two things: video games or educational for children under 12. If you're not one of those two, you're not eligible in Ontario. So let's just jump in the agenda, just to give you guys a little bit of background about Leyton. Introduction, we'll talk about eligibility, we'll talk about eligible expenditures, we'll talk about the rates, we'll talk about what a large digital game company is, the application process, documents required, and how we can sort of help. The other thing to note about this is that the digital media tax credit in Ontario and most provinces is very document heavy. So it's about a lot, you must make sure that you have a lot of documentation in place, a lot more than you would need for shred, for claiming shred. So a little bit about Leyton. We have over 20,000 clients. We're in 12 different countries. We have over 1,500 employees. 40% of those are female. And we have two offices in Canada, one in Toronto, one in Montreal. I joined Leyton to open up the Toronto office in April of 2019 with 2 people. We are now at over 50 2 years later. So we're growing quite exponentially, and we're growing well. We have over 11 years experience, over 90 employees, and in Canada, over 700 clients. So just a quick introduction to the credit. Again, this is a tax credit, not a grant. So you get credit for it after the fact. So it is a refundable tax credit. You apply at the end of you apply in the tax year in which the product has been completed. So if you are in the middle of developing version 1 or an alpha or beta version, you can't apply until you've completed the product, and that product must be available in some way or form, either for people to use privately as kind of like a private test, or publicly. And it's based on eligible Ontario labor expenditures and eligible marketing distribution expenses claimed by a qualifying corporation. Now, the expenditures must be related to the creation of eligible interactive digital media products. And the tax credit can be either 35 or 40% of expenditures, depending on how it's created and how you exploit those digital products. What that means is if you're developing the product for someone else, it's 35%. If you're developing the product for yourself, for your company, it's 40% of expenditures. There's no limit on the amount of eligible Ontario labor. And this is back to your question, Craig. The eligible marketing and distribution expenses, which you don't get for any other tax credit or grant, except for CanExport, but that's for exporting outside of Canada. But you get $100,000 for marketing and distribution expenses per non-specified product. And we'll get into specified versus non-specified. So this is kind of, it makes it seem like more is eligible than what I talked about, but the primary purpose of the interactive digital media product must be to entertain the user or educate users under the age of 12. The primary purpose must achieve by presenting information at least 2 of the 3 following formats: text, sound, or images, and also must meet the following criteria. You must be able to choose, you must be able to use, you must be able to communicate, and it must be non-promotional. So can't be for a specific, like for promoting a product that you have, okay? And it is required to have a revenue generating stream, or if not, it will be deemed promotional and not eligible. So not saying that you must be generating revenue from it, but you must have a stream to be able to generate revenue from it. And that's as simple as being in the App Store. So products that may be eligible, okay, these are digital games, mobile applications, e-learning products, and e-learning products, again, for children under 12. Products that aren't eligible, again, if they're used to sell or promote a company's goods or services, if it's a coupon website, online classified listings, promotional content, there's a whole plethora of not eligible products. Again, these are the type of products that are excluded. So products providing any content that is news, public affairs, opinion, commentary. Now, this stuff, if it's built into the game, that's fine. Like, obviously, you have games where you have fake news broadcasting and or even real news in the game itself. That can be part of it, but these products are not eligible. It's kind of pretty straightforward. Most websites, again, back 4 or 5 years ago, you could claim websites, are not eligible, but they can be if they are digital games or their children's educational products or their virtual or augmented reality experiences. So those are the types of products for the most part. Now, when it comes to eligibility, there's this thing called the 80-20 rule. Or sorry, 80-25 rule. I always call it the 80-20 rule, but it's the 80-25 rule. And it means that 80% or greater of the total development labor cost to create the product must be for work performed in Ontario. So that means that all of your labor costs that are included in claiming this digital product, 80% of all of your labor must be in Ontario in order to be eligible. And 25% of the total development labor must be paid to Ontario-based employees for work performed in Ontario. So that means that you can have, so the 80% rule means 80% of your salaries and of your subcontractors, because a lot of companies use subcontractors, okay, must be 80% in Ontario and paid by a company, paid to a company in Ontario. 25% of all of that must be salaries of your total labor, of your total Ontario labor. So 80% of your total labor must be in Ontario, 25% of that labor must be salaried people on payroll. I know it's quite complicated, and this is why we're having this kind of presentation. This is probably the most complex province to claim the digital media tax credit from my experience. So in order to be eligible, both of these calculations, both of these kind of criteria, the 80% and the 25% must be met in order to be eligible. So what qualifies as a corporation to be eligible? So any Canadian corporation, so they can be foreign owned. So you'll know, I don't know if you know this, but Ubisoft, all of the big game developers, they all claim the digital media tax credit, and all of those are foreign owned. So EA Sports, EA Games, all of those guys, they all have corporations in Canada, and they're all eligible, even though they're foreign owned. Depending on where the development is done. Most of those companies are located in Quebec and BC, because those are kind of the more lucrative and easier provinces to claim the digital media tax credit. Now, the one thing to note is that the digital media tax credit takes about a year. It used to be about 1.5 to 2 years to get approved, but they've cut it down to about a year. And that means that you could have claimed SR&ED within that year. So you're going to have to identify what potential SR&ED that you're going to be claiming and subtract that out from the digital media, because you can't double dip for both. So either you're claiming for digital media, or you're claiming for SR&ED. Now, when you're developing educational products for children under 12, most likely it's not going to be eligible for SR&ED. So most of your development is going to go under digital media. Also, the digital media tax credit covers a lot more labor than what SR&ED would be eligible. So if you have illustrators, renderers, like people who are artists that wouldn't typically be eligible under SR&ED, those all can be eligible under the digital media tax credit. Again, it can't be, one thing is, and this is probably a given, is that it can't be a not-for-profit. You have to be paying taxes. You have to be a Canadian or a Canadian corporation that is for-profit. So eligible expenditures. So we'll get into this real quickly. Ontario labor expenditures. And one thing we'll get into the eligibility of subcontractors, because there is a little finicky kind of rule here. So must be paid to individuals that reside in Ontario, and they must be directly attributable to the development of the product itself that you're developing. So again, that's vague, but that can include a lot of people. It can include pretty much anyone who's on your payroll who has touched the product, touched the development of the product. Paid for services rendered at a permanent establishment in Ontario and incurred in a 3-year period prior to the completion of the product. So that's something I didn't touch on. So what you can do when you're claiming for a product, because this is product-based. So what that means is you can claim it once you've completed the product, once the product is launched. The good thing about the digital media tax credit is you can go back up to 3 years and capture all of those costs that relate to the development of that product from the fiscal year that it launched. So if it launched in July, or let's say we're in April, if it launched in April this year, you can go back 3 years and claim all of those costs going back to April 3 years ago. Now, when it comes to subcontractors, and I can't remember if I have it covered, so I'm going to talk about it now, and if it comes up again, that's great. You can't hire a company as a company that has more than one employee as a subcontractor. You can only hire individuals as subcontractors, or companies that have just one owner and one person working for that company as subcontractors. So that is kind of where to ensure that the eligibility criteria is instilled for the development. Now, when it comes to marketing and distribution expenses, the expenses must be incurred in a 24-month period prior to or 12 months following the completion of the product. And you can claim up to $100,000. And that includes a lot. That includes any packaging, that includes marketing persons, that includes a lot of different, anything related to marketing and distribution expenses. So that's a really good thing. So specified versus non-specified products. And you're going to hear that when you're talking to people. So a non-specified product is developed for sale to an arm's length party, which means that, hold on. Yes. So which means that the company itself is developing the product. And I know this might be confusing, and it always confuses me for a second. I just want to make sure I get it right, because this means that the company itself is developing the product to sell itself, like to sell it itself. They haven't been hired by anyone else. They're doing it in-house and they're developing it themselves. A specified product is developed by a company under an agreement with an arm's length buyer. So that means they're developing the product for someone else. And it's for sale or license to one or more or two or people who are at arm's length from the buyer. That's why there's the difference in percentages. So if you are yourself, so say you're Ubisoft and you're developing the game yourself, you get, well, Ubisoft's different because they're a large corporation, but say you're a company and you're developing, say company ABC is developing game XYZ internally for them to kind of distribute themselves, they can claim 40% as a tax credit. If company DEF has hired ABC to build XYZ, then company ABC can claim 35% of their labor for that development. But if they're developing it for another company, they don't get the marketing expenditures to be claimed. So the only time that you get the marketing and the 40% is if you're building the product yourself internally for no one else. I know it's confusing, but just if you don't want to remember non-specified versus specified, just know that if you're developing it internally, 40% and marketing. If you're developing it for another company, 35%, no marketing.
Yeah. So if I'm writing an app to go in the App Store and I have in-house development, it's 40%.
Yes.
And if I outsource to someone else?
No, if you're still that same company and you're building it for someone else.
Okay.
It's 35%.
Perfect.
Yeah. So now to add some more complexity into this. This is where you incur at least $1 million of expenditures, Ontario-related expenditures in a fiscal year. If that's the case, then you reach this threshold for a large digital game company. And so you can claim, which means that, so for example, if you're not a large digital game company and you're just building a game and you're under that $1 million, you have to wait until the product's completed before you can claim any expenditures and go back. If you're at that $1 million threshold, you can start claiming every year for the work that's being done because you're at such a high level of expenditures. So if we're talking about the specialized digital game corporations, if you incur $1 million in labor, in Ontario labor directly related to the development of digital games, then you can claim the OIDMTC annually. So that's if you're a specialized digital game corporation. The other time that you're considered, and it's not really a big deal, but you must, if you've also incurred, this is under a fee for service arrangement, if you incurred a minimum of $1 million in labor over a 3-year period for a single game, you end up falling under the qualifying digital game corporation. Now, to be honest, I'll be completely honest with you, I've never done such a large claim like that. I'm not too familiar with the criteria that surrounds that. I'm more familiar with the criteria that surrounds that. If you have $1 million in expenditures in a year, then you can claim it. Then you can claim OIDMTC annually. You don't have to wait until the product is completed. Just because we're talking large companies here that I haven't had the opportunity to work with yet. So we'll get into that. So if you are, if you fall under one of these two, there are some benefits, and we'll get into that in a second. So if you fall under a large digital game company, one of those two, your game doesn't have to meet the 80-25 rule. Again, your game does not have to be completed. Remember, because you can claim it on an annual basis. You can be related to the publisher of your game. The other thing we touched on is you can apply annually, but your tax credit rate is 35%. So still, if you're up in that, I wouldn't shy you away from getting up to that and losing that 5%, because this way you can claim it annually. There's a lot less rules that for you to claim. So it is still very lucrative at 35%. The one thing about Ontario is there is an application fee. There is an application fee in other provinces as well. They are much less. I think Quebec actually might be a little bit higher. But yeah, so the way you apply is you go to OntarioCreates.ca. You sign up, and then they open up the portal for you to fill in. There's a lot of different areas that you have to fill in and add documentation and all that sort of stuff. Once you get assigned a reviewer to look at it, either they'll ask for additional information, or what they'll do is they'll generate a certificate of eligibility. And that's where I was talking about the 1.5 to 2 years to get that certificate of eligibility. Because they've constricted the eligibility criteria, they are able to get it. They have been able to get it down anywhere from 6 months to a year. It's closer to a year, but I have seen some instances where it's 6 months. So then once you get that certificate of eligibility, you file it with your tax return. So as far as fees go, the fees that you have to pay to file the application, they're calculated at 0.15% of eligible expenditures for the application. So there's a minimum fee of $1,000 all the way up to a maximum of $10,000 to apply. Just to apply. That's non-refundable. So when I talk to you about supporting documentation and how it's document heavy, here's a list of supporting documentation or supporting documents that are required. Incorporation documents, corporate charts, consolidated annual financial statements for the current year, chain of title documentation, description of product development, complete detailed production schedule and timeline. So a lot of, for these, they're looking for Gantt charts for the most part. These are very helpful for that. Business and marketing plan, financing plan, indication of sources of financing for the product, financing contracts if there are, cost report or schedule of actual eligible Ontario labor expenditures. So there is a template that you can use for that. Any T4s or contractor agreements, list of names and roles of all individuals working on the product, schedule of eligible marketing and distribution expenses, a copy of the completed interactive digital product. The product should be shelf ready or exploitable. So a lot of times that would just be either a file or a link. Description of the product, financing documents, website of the product, educational product. So there's a lot there that you need to have. And this is not just, it's nice to have. These are must-haves in order to file the claim or in order to file the application. So it's not just must-have, or it's not just nice to have, it's must-haves. So how do we help? These are just different products that we can help with. So we can help with grants, we can help with sales tax recovery. Here's the digital media tax credit. In Quebec, we can help with the e-business tax credit or the shred. So if we're talking about the digital media tax credit, how we can help by helping to create those documents that are needed where you might not have them. Like what we can do is the expertise that we bring is there aren't prescribed documents that you prescribed kind of templates that need to be filled in. So a lot of times it's interpreted in the person who is applying in their way. So what we can do is we can help with that. What is the best way to present the information? As well as create the information. It's not that we're doing anything that's shady. We're just making sure that we have that we're complying with the program by creating the documents that they're looking for that you might not have, for example. So it's people do it all the time. But for the most part, if you are a video game company with a few employees, you should have most of those documents anyway. We do, I'm sure this question will come up. Our fee structure is, we do work on a contingent or success fee base for any of our contracts or any of our engagements that we have with our clients. We can also offer hourly or flat fee if that's something that you want. The difference between it is hourly and flat fee are due upon filing, whereas the success fee or contingency fee is due once you've received the funds from whatever funding body we're applying for. So I know that's a lot of information. Again, we serve every industry. I know we serve over 60 industries, but like we have expertise in every industry. I myself, I have over 12 years of doing SHRED and government grants. I've done SHRED claims in pretty much every industry that you can think of. Digital media, I've done claims in Ontario, Quebec, BC, Manitoba, and Nova Scotia. To be honest, I've done multiple in Ontario and Quebec, and I've only done one in BC, one in Manitoba, and one in Nova Scotia. Again, it's about understanding the eligibility criteria and just adhering to the program. A lot of times it doesn't deviate too much from each province, but I do know that Ontario is probably one of the most strict when it comes to eligibility criteria. So, yeah.
That was great, John. Appreciate it.
Yeah. No, yeah.
Okay. We do have a bunch of questions here.
Sure.
And hopefully we'll get some more as we go. I'm just going to put this link in the chat room if you get a chance to, because the first question from Jacob, and he asked, does development of my own game software that adds on to wearables for kids under 12? And I looked at this quickly. It's a monkey jabber. Looks like it's a safety watch for kids. And
let me see. Monkey jabber. I'm just bringing it up. Sorry, it's a little slow.
Yeah, it's okay. It's
monkey jabber GPS for a safety watch. Give me I would.
So he writes games to go on this watch.
Okay. So if you're the games that you're writing to go on the watch, yes. The watch itself, no. The watch itself might be SHRED eligible, but the games that you write, for that specific watch would be eligible. Again, but you must have expenditures. So you must have people on salary or individuals as contractors in Ontario. If it's in another province, we can explore that for the other province. But if it's in Ontario, yes, for sure.
Also, for wages, he imagines we deduct any federal wage subsidies, CEWS, summer jobs grants, etc., as in they can't double dip.
Yes, and that's a great question, and that applies to any kind of government funding that you receive. If it relates to a salary that you're claiming for digital media or SHRED, you must reduce it by the amount that you've received within the fiscal year. I'll give you an example. So wage subsidies, yes, any kind of CEWS, IRAP or IAP, you must subtract what you've received for that individual when you're claiming whatever you're claiming as a tax credit. When it comes to other grants, just as an example, say you've received a funding agreement for $100,000 from a funding body, but in that fiscal year you only received $50,000. You only have to subtract the $50,000, not the total amount that they've promised you. You only have to subtract out the amount that you received within your fiscal year, if that makes sense. So I know I went beyond your question, but I just wanted to make sure I covered that.
Oh, thank you for that. We have another question here. I think this is from Tanya. How much flexibility is there in the definition of digital games?
Zero.
I'm a creative writing platform. She has a creative writing platform for 13 plus. So essentially entertainment with a gamified edu underlayer.
Okay. So if we're talking 13 plus or 12 and under, it would, So that's where we would talk one-on-one and kind of do an evaluation. There are other, and Craig was talking about this earlier, there are other tax credits. So this is just for digital media, but there are, there's, for example, a book publishing tax credit as well. And there are different ones. So if you go to OntarioCreates.ca, they'll have different tax incentives there that you can explore as well that might fit more under what you might think or what you might find. I see a question from someone.
Yeah, there's a few in there. So the next question here is, I'm working on a MarTech, marketing technology application for small business. Is it included, and should I leave it for next year to apply?
Marketing tech would not be eligible for this program because it's not a video game and it's not educational for people under 12. Marketing technology might be eligible under SHRED or IRAP, but not under digital media.
So if it was eligible under SHRED, it's apply for after. If it's IRAP, you have to apply for beforehand.
Yeah, and just an update on the IRAP program from the federal budget. I know we're talking digital media, but IRAP has announced an additional $500,000 over 5 years, so an additional $100,000 throughout Canada, specifically to help small, medium-sized businesses. So it's hoping to expand its reach. So that is one positive thing about IRAP, just because we brought it up. Sorry about that.
No, that's the reason why I brought it up. I knew they released some new funds, and since you mentioned it, I think people should be aware because that money disappears. You need to apply for it.
It does, yeah, and they've made it very difficult. Not difficult, but they've been very keeping their cards close to their chest, if I can put it that way, for the IRAP. Now, I'm hoping that with this additional funding, that it will open up the doors to some of the smaller, medium-sized companies. The one thing to note with this funding is they're going to be, the eligibility is going to be based on diversity, and different criteria. So this is really going to be interesting to see how they do that.
And we do have another question here popped in. How does this look in combination with IRAP?
Mr. Fred, yes.
Yeah.
So it's the same thing as if it would look for SHRED. So if it's eligible for SHRED, it's most likely eligible for IRAP. But when it comes to IRAP is a grant beforehand. So any IRAP funding or any SHRED funding that you get, you must subtract out for when you're claiming the digital media. So IRAP it's going to be easier to identify the IRAP because you're going to have already been approved for IRAP before you apply for digital media. So you'll easily be able to take that out. When it comes to SHRED, you might be still in the same fiscal year when you complete your product. So you might not know how much SHRED, you might not have done the SHRED claim for that fiscal year yet. And that's where we can help as well, is calculating SHRED, IRAP, and whatever else needs to be subtracted out before you file digital media.
Now, you showed where you help with some of these documents. Where in the process does Leyton start working with the business?
As early as possible. We've started with companies who just started developing a product. We've worked with companies who have already developed a product and now didn't know that they could claim it. So now we have to go back 3 years and kind of put together all the information. We've worked with companies who are right in the dead middle of developing the product. The earlier you can get us involved, the better, because as it is very document heavy, it gives us more time to kind of help to build in those documents into your process. This is different from SHRED because SHRED, what we try to do is we try to use what you currently have to support the SHRED. This, for digital media, there's specific documents that they're looking for. So we have to, and a lot of times it's not stuff that you can use from an email. It's like, for example, the Gantt charts and things like that. So it's a little bit more overhead than it would be for SHRED documentation.
So you mentioned the fee around. It can be up to $10,000 to apply.
Yeah.
What happens if it's rejected? Do I have to pay to refile?
Yes. Yeah, you would have to pay to refile. No, if it's the same product, it all depends. So sometimes they'll make you reapply. Sometimes they will work with, and this is actually not sometimes, most times they will work with you. If there is eligibility that they see there, they will work with you. So you don't have to completely reapply, you just kind of modify, if that makes sense. But if it's something that is, and this is why it's on a per product basis. So if it's a different product, then yes, you'd have to reapply for that different product. If it's the same product, then most likely you don't have to.
Yeah, and we have a question about your fees, like we always do.
Yes.
And when you're working with someone on like the digital media tax credit, do you charge per? How much do you charge per application?
Yeah. So again, the fees range depending on the size of the claim. So it's very like if you're up in the $1 million, we're not going to come in at 20%. We're going to come in much lower in the single digit percentages. But we will come in with a fee that's fair based on what expenses are potential. So it can range anywhere from 1% all the way up to 20% if it's a smaller kind of product.
And speaking of, a lot of people might have, when you saw that one slide with when you're spending over $1 million a year, like, whoa. How much do I need to be spending in order to really look at this?
That's a good question, Craig. I would say, like, if you think about it, to be honest, you're looking at maybe 100, maybe 200,000 in salaries if you're a specified product, because then you're at that 80,000 kind of tax credit there. That makes probably the most sense. But yeah, I would say 200,000.
Okay.
Yeah, but I'm more than happy to explore at any point. More than happy to talk one-on-one, even if you don't have any salaries yet. If it's something if it's a great product you think, more than happy to kind of sit on one-on-one or answer any specific one-on-one questions.
So if I go through this and I don't think I qualify for the digital media tax credit, but I'm not sure, I'm spending 100,000 plus a year on all different stuff. What other things should I be looking at?
Yeah, so actually, I can share this with the group. This is something that I'm going to put it in the chat for everyone. You can go to this website and create your own profile, and it will tell you what grants or tax credits or funding from the government that you might be eligible for. And what it'll do too is if you create a profile, it'll update you if there's new grants or new funding that comes out. So I would suggest if you're not eligible for that and you are spending money and you want to see what you might be eligible for on your own, go to the website, set up a profile. If any do come up that that you're interested in, that you think you might be eligible for, forward them off to me, and I'm more than happy to field any questions about them.
And with IRAP just releasing new funding, I'm hearing people talking about new stuff all the time. When is the best time to apply for this stuff?
Yeah. So when it comes to grants, the best time to apply is the answer is it all depends on when you're looking to spend the money or hire that person or start the project. That's simple, because the grants are on a upfront basis, so you must apply before starting anything. So those are ones that take a little bit more planning. When it comes to tax credits, very straightforward. You apply for SHRED. You apply within the fiscal year with the work and expenses that you have, and you can only go back up to 18 months for that. And for the digital media tax credit in Ontario, you apply within the fiscal year in which the product was completed. So it's, again, to answer your question, it's a complex answer because it all depends on what you're applying for, if that makes sense.
Makes sense. And, I know that money becomes available at certain times and then it disappears because it gets used up. Everyone applies, and depending how strict or how loose people are with the purse, that money can go pretty fast.
Yeah, that's a great way. So for the most part, just so that everyone is aware, most granting bodies work on a government fiscal. So they get replenished April every year. So just so you guys know, but a lot of times, like for example, IRAP, they're going to tell you to apply at any time because they will look at your application on a yearly basis, and every midway through the year, they tend to have new funds that come up.
Here we are. Are there any types of grants that you can think of which apply to marketing tech companies?
No, unfortunately, there isn't very much when it comes to marketing dollars, unless you're looking to market your product outside of Canada. There really isn't much unless you're in the agriculture space. Even then, there isn't too much. They come and go sometimes. But when it comes to marketing tech, the government sees it as you're generating revenue. So they don't see a real need to create grants around marketing tech. Now, if it qualifies for SR&ED, that's a different point. The technology itself that you're developing, maybe it's RTB, real-time bidding, or different things like that, might be eligible for SR&ED, and that's a totally different conversation. But
yeah, maybe
no grant specific for marketing tech development.
Yeah, but things like maybe the Ontario Jobs Grant and a few others might be appropriate. They're not big ones.
So yeah, they're hiring grants easily. Yeah, hiring grants you can apply for any kind of development that you're looking to do. But when it comes to specifically like marketing dollars from grants, there isn't really much out there, if anything.
Fair enough, because it usually gets directed towards other things.
Yeah.
So I love that database. And if I go there and I still look around, when should I actually call up Leyton and say, or email you and say, John, I heard this. Should I do it right away, or should I do it after doing some homework? When should I talk to you?
It's up to you. It's whatever you feel most comfortable. Some people will do their own research a little bit and then come with a little bit more information. Some will just provide me with the grant and why they think they might be eligible. It all depends on when you kind of want to approach. But I'm more than happy to have a conversation at any point with anyone about your company if you have any questions. But for the most part, what I would suggest is go to the website, create a profile, save that profile, or once you fill in all the info, it's going to present you with some grants. Go through those. If there are any, reach out to me, and if you have any questions about any of them specifically.
Yeah, and the link you posted was just to me. I didn't realize that. I just posted to everybody. They were like, what link are you talking about? There's a link where you can go and take a look at the grants that are potentially available for your industry. And people want to reach out to you. We're already getting some questions. Do you have where they can reach out to you?
Yeah, so I'll post my email. I'll also post my LinkedIn.
Fantastic.
Is that right? I think it is. No, hold on. I'll find it. I'll post it in a second here, guys. Sorry, I wasn't prepared to post my LinkedIn.
And while we're waiting to see if anybody else has questions, you mentioned at the beginning of this there was some sort of international Leyton thing coming on in May, maybe?
Yeah, so we had a global summit or North American summit January, February of this year. And coming up, we are having a global summit where we're going to have panelists, and we're going to talk about, we haven't finalized the subject matter yet, but it's going to be kind of 3 afternoon sessions, maybe 4, where there'll be specific topics where we're going to discuss with our clients and with some of our experts here within Leyton Canada, as well as Leyton US. It'll all be online, and there'll be plenty of opportunity to ask questions. Right now, we're looking around sustainability and green kind of initiatives, and potentially like post-COVID recovery and things like that, as well as the move from physical or in person to kind of digital kind of thing. So those are kind of the topics we're throwing around right now. But once it's all solidified and we get it all finalized, certainly we will publish it, and hopefully everyone will know it.
Are you seeing, you have your ear to the ground more than this, and I might be keeping you longer than I should. But are you seeing the government talking about more different relief programs, more programs that small businesses should be aware of?
Currently, nothing new from the budget. There were just that the same support is going to be ongoing for the companies. Nothing new though. I do know that I think CERB is around, but it's reduced. It's going to be reduced a little bit. That's for individuals. But as far as companies go, I know that SUS, RRF, and IAP are still around. I know that BDC still has some stuff around, but nothing new as far as support for during the pandemic. But there are some positive kind of things that as far as other funding outside of relief funding that is going to be coming through this year. So hopefully we'll get more details, and we'll be able to provide more details to you as we get that.
And are you, Fred just asked a question here, are you connected with OCE, OCI, Ontario Centers of Excellence? And
100%.
Any news upcoming from grants from them?
Nothing new. We do know that there are going to be some changes. I know that Avon is going to be going through some changes. That's the autonomous vehicle. And it's, I can't remember what it's going to be called, OVAN. I can't remember. But anyways, they are changing their name, no longer OCE. They're going to be OCI. But we are very well connected with a lot of their development managers there. So if anyone has any questions, more than happy to answer any questions you might have. So it's going to be called the Ontario Centre of Innovation, I believe, instead of Ontario Centre of Excellence.
And we had a friend of mine from OCI on at the beginning of April. They were talking about a bunch of these funds. If you're interested, I'll put the link to that video.
Yeah, Craig.
But definitely reach out. They're all our OCI now, and everyone's a little confused. But
but you know what though, I must say, and Craig, I'm sure you would mirror this, is that I find that OCI is one of the more friendly funding groups that are like they want to give money out.
Yes, OCI. They've always been really good. Love their Smart Start program. Then they ended it. Then they brought it back. I don't think it's back now.
I don't think it's back yet. No, but I think it is coming back.
So stay with these cycles because this money is available. OCI. Take a look at Futurepreneur. If you're under 39, they work with the BDC to give you up to $60K in low interest-free loans to get your business going and help you mentoring and stuff. So there is money available if you are at those levels rather than going directly at grants and loans from other people.
Yeah.
So thank you again for taking the time today. Thank you, everyone, for joining us. You had some great questions. I'm going to send the contact and link information that we put in the chat room out to everybody in email tomorrow morning so you can reach out to John directly. And I hope you appreciate it as much as I did. That was great information, John.
No worries. And one more thing, there was a question at the beginning if we're going to provide the presentation. And Craig, I'll send it to you as a PDF and you can send it out to everyone.
Yeah, I missed that one. Normally I catch that every time. Yes, definitely. Yeah.
It was at the beginning and I answered it through Q&A and then it disappeared. So yes, we will provide the PDF to Craig and he can send it out to everyone.
Thanks again, everyone. So I'll send that out with the morning email. So appreciate it. And we'll see you all again soon. And don't forget, Startup Pitch tomorrow night. Take care.
Thanks, Craig. Thanks, everyone. Take care. Bye-bye.